Okay. Imong mama or imong ulam mangutana nimo or ingon nimo, may pato sa unang panahon ka ng 20 pesos na mo makaabot pag pila ka adlaw. Sa una ka ng 5 pesos na mo, taghan na kayo na mapalit. Sus karon, ka ng 5 pesos na. Di ka palit ko sa bullpen. What do you, or how would you respond to your mother or to your grandmother saying those things? Sa una mo tuma. But actually, there's an explanation why your 5 pesos or your 20 pesos could not buy the same quantity of goods as before. Why? Because of inflation. So inflation could actually explain that. So the CPI or the Consumer Price Index can actually explain the phenomenon. So later on, when your mother or when your grandmother would ask you or would tell you the same, you have now a concrete answer, economic answer. Okay? So here, let's define nominal income and let's define real income. Okay? The difference between the two is very simple. Nominal income is the current peso amount of a person's income. Whereas the real income is the nominal income adjusted for price changes. Okay, let's have an example here. How much is this? 20 pesos. So this is the nominal value, 20 pesos. Now let's say 2019. This 20 pesos could buy 2 ball pens. So meaning to say, the cost of each ball pen is 10 pesos. So you were able to buy using your 20 pesos. However, in 2020, the price of ball pen increased to 20 pesos. Question: what is the real value of your money, this 20 peso bill? $20? Yeah, 20 is the nominal value. But I'm asking about the real value. It should be adjusted on the what? Current price. So if in 2019 you were able to buy 2 pieces of ball pens or 2 ball pens, now in 2020 it's already 20 pesos the price of each ball pen. So the real value of your 20 pesos is only 10 pesos. The nominal, it's 20 pesos. But the real value, it's only 10 pesos. Because if you're gonna compare the prices in 2019, your 10 pesos can buy only 1 ball pen. It is just like saying that in 2020, the value of your 20 pesos is just like 10 pesos in 2010. Okay? Did you understand? Now, if you look at the formula for real income, nominal income divided by the CPI, Consumer Price Index, times or multiplied by 100. So you have now an answer to your mother, to your grandmother, why a certain price or a certain quantity of or a certain amount of money that you have cannot buy enough goods and services because of the price increase. Now let's have 3 scenarios here. These are scenarios to show you if your income is enough to cope with the increase in price. Okay? So let's not only look at the nominal value. Let's say you are working and then ipatasan mo sweldo. It doesn't mean na pagka humani mo work, pagdawat mo sa sweldo, di pa kaya ka. Pero tanawan sa presyo. Okay? You look at the price. What happens to your real income? Did it increase or did it increase? Now let's have a scenario here. Scenario 1. In year 1, your income is 50,000. That's your income. The CPI is 100. In year 2, your income is 55,000. and then the CPI is 110. So this is your nominal income. If you look at it, you're happy probably because your income has increased by 5,000. But, question, did your real income really increase? Let's see. So we will adjust now to current price, okay? Let's adjust your income to the current price. 50,000 divided by 100 times 100, that is 50,000. So that's your nominal. Okay? And this is also your real income on the current year, year 1. How about your year 2? 55,000 divided by 110 times 100, it is also 50,000. So meaning to say, your income did not really or actually increase. It's only the nominal value. But if you're going to adjust to the price change, nothing has changed to your income. Now let's look at scenario 2. Your income has increased by 2,000 from 50,000 to 50,000, 52,000, and the CPI is 100 to 110. Let's see if you're coping with inflation. So your real income is 50,000, but your real income in year 2 is 47,273, meaning to say you're losing because of inflation. Pasabot ani, murag ni sakay og habal-habal, kanang imo kang gitalang slice bread ka usa ka loaf, isakay ka habal-habal, ka kanang habal-habal, daghan mo kay ng pasahero, nagudot, pag-abot nimo sa bukid, ingani ka dako ang slice bread, ingani na lang dito. Nga naman, because nahuot naman siya. In the same way, ingani mo itapos imong income pag taas padayon ang presyo. Murag wala siya ni tubo. Looking at it, divide ka, may increase siya by 2,000, but actually in reality, it decreased because of the price increase. Now let's look at year 3. So from 50,000 to 60,000. So your income has actually increased by 10,000. However, if you adjust that to the price change, it's only 54,545. Did you get it? And that's why if you're going to put your money somewhere and the purpose of that savings is for your retirement, let's say 40 years, you have to think if the interest rate is growing higher than the inflation rate. Let's say, for example, you put you have a savings deposit earning 1% per year. But the inflation rate every single year is roughly, let's say, on the average of 3%, not looking like at 2% per year. So you have to find an investment vehicle that earns higher interest than the inflation rate. So let's say if the inflation rate is 3%, you have to find an investment vehicle that gives you higher than 3% if your purpose of saving is long term.